Alright, guys, welcome to PDSN, where we cut through the noise and skip the hype and talk about what's actually happening in the world of tech, money, and sovereignty. Today's topic: Bitcoin dipping under 60K. ETFs flow spikes, and the headline screams like it's the end of crypto. Spoiler, it's not. Bitcoin is the thing collapsing. Isn't the thing collapsing? The U.S. economic environment is. Let's break it down. Bitcoin panic versus reality. So Bitcoin hit a new 2026 low, bounces the dip again. People freak out. Media run the usual crypto winter script. But here's the truth. This isn't a Bitcoin crisis. This is a macro liquidity flush. And Bitcoin is just the thermometer, not the disease. Let's talk about the elephant in the room. The U.S. economy wobbling harder than most Americans realize. We've got an AI bubble inflating faster than earnings. A PC market that's been shrinking for years, an auto sector drowning in debt and inventory, rising energy costs, consumer credit at record highs, savings record lows. This is not a stable foundation. This is a house built on wet cardboard. The U.S. market shakes, liquidity drains, and Bitcoin gets dragged with it. Not because Bitcoin is weak, but because of the system it's built around. Uh, Now let's talk EFTs. June saw the biggest daily outflow of the month. Institutions pulled capital the moment BTC dropped under 60. This isn't panic. This is automatic risk management. EFT flows, real BTC selling, real selling, downward pressure. But again, this is a macro, not crypto. Here's where it gets spicy. The U.S. tech sector is facing a trust crisis. All AI hype is outpacing reality. PC sales are declining. Microsoft is taking a hit on its security, updates, reliability, and globally, the trust in the U.S. leadership is slipping. It's not gone, but it's slipping. When trust falls, markets fall, and Bitcoin gets caught in the crossfire. The auto sector, energy costs, and consumer debt. The auto sector is slow motion. Train wreck. EV demand is cooling. Inventory is piling up. Loan delinquencies are rising. Energy costs are squeezing everyone from manufacturers to families. And consumer debt, it's all at level. That makes 2008 look like a warm-up lap. This is why markets are shaky. This is why liquidity is thin. This is why Bitcoin is reacting. Here's the part of the headline never tells you. Power law models show that the drop from to 58 from 60 is normal volatility for this stage of the cycle. This isn't a collapse. This isn't a trend reversal. This is a reset. Bitcoin has survived China bans, exchange collapses, regulatory crackdowns, liquidity crisis, global recession, a dip under 60K. That's Tuesday. When trust falls, people move to hard assets. Gold rises, crypto rises, not instantly, but inevitably. Because when the institutes wobble, people look for systems that don't depend on trust. Bitcoin doesn't need a central bank. It doesn't need a bailout. It doesn't need a politician. It just exists. That's why it survives. Here's the big picture. Trust in the U.S. institutes are multiple decades lows. Trust in the big tech is slipping. Trust in centralized systems is eroding. And globally, countries like Canada aren't bending over backwards for the U.S. deal anymore. The power dynamic is shifting, slowly but clearly. Bitcoin is crashing. The old system is. Bitcoin isn't crashing. The old system is. So when you see Bitcoin under 60K, don't panic. Zoom out. Look at the macro. Look at the trust cycle. Look at the structural cracks in the U.S. economy. Bitcoin isn't the problem. Bitcoin is the signal. And the signal is telling us the old system is shaking and the new one is loading up. Like, follow, and subscribe. We'll be back.